Welcome to In a World with Real Media. I'm your host, Brad Burrow. In this podcast, we'll dive into the lives of the most successful people in business. We'll learn how they overcame adversity, took advantage of opportunities, and learned from their experiences. Learn from our experts, get inspired, then go live your story. It's In a World with Real Media. Hello and welcome to the In a World with Real Media podcast. I'm host Brad Burrow, and today we have Danielle Hugunin and Jarod Temple, both producing area managers for Bell Bank Mortgage. And by the way, they're going to be doing a podcast here, so this is really fun. I'm glad you guys got to come in and be with us. I got lots of fun questions for you guys. And how are you doing? We have to say it's very hot, but it's nice in the studio.
It's nice and cool in here. Thanks for inviting us in.
Yeah.
Thanks for having us. Appreciate it.
My pleasure. Well, I want to get into a little bit about your guys' background, and so we'll talk about that in a minute. But tell me about Bell Bank Mortgage. This is a new branch in Kansas City, kind of breaking out of into a new market.
Yeah. Actually, we've been here for, 7 years?
Roughly.
But we have kind of recently reinvigorated ourselves, and we're pushing towards growth and looking to open another office here in Lee Summit and then probably in the Northland soon after that. So,
where is the current office?
College in Metcalf.
Okay.
Mm-hmm.
Okay.
So Bell as a whole is really unique because we're one of the biggest independently held banks in the country and are still owned by the three families that started it. So it's really unique in the sense that we are a bigger bank, but family is really important to our culture. So it really does make it feel like a community, and that's one of the reasons why Jarod and I both love being here.
It's kind of unique, isn't it? I mean, most of the banks that were family owned have been purchased, right?
Correct. I was a part of one of those before this.
Yeah. So why have they stayed the same? That is unique. Do you know?
It's just always. In fact, Bell has a billboard in our Minneapolis market that says "Not for sale." It has just always been a core part of who we are, and it continues to remain that way, which I appreciate.
Yeah.
It's interesting that you mentioned that because when we bought our house, our mortgage got sold 2 or 3 times probably. Right. And that's disconcerting when you're a homeowner. It's like, what in the world? Mm-hmm. Even though the terms stayed the same and everything, it's like, I don't know. I just didn't like that.
Chasing it around. Yeah. For sure.
So that doesn't happen with Bell.
Right.
Yep.
We do retain our servicing, which is great. Our servicing department takes with pride that we answer the phone. There's no automated system. In fact, Jarod, you sometimes have our recruits call just because we want them to know if our client calls a customer service number, like they answer the phone within the first couple of rings, and they do make our payments, their payments to us. It's great to have that. You don't realize how important that is until you are able to offer that extra service.
Yeah. So you don't have an AI person saying, "Hello, can I help you?"
We do not have a phone tree. It's an actual pickup. There was a quote or a stat that they had thrown up. I think 64,000 calls last year, and something like 98.5% of those were picked up within 5 seconds.
With Bell?
Yeah. Servicing for when
Mortgage
people
servicing.
were calling our servicing people.
Wow.
And something like 99% of those were first call resolution.
That's got to be.
That's
not even
heard. That's unheard of.
Yeah.
I mean, it's truly amazing.
I mean, that's a selling point right there, right?
It is
100%.
Can you guys? Yeah, I do want to talk about that. So that's one thing that your approach is different for that reason. What are some of the other things that sets Bell apart from? There's a lot of mortgage companies out there. Man, that's like so competitive.
Honestly, I think it's the people. I mean, it used to be, if your rate wasn't competitive, well, we all have to have competitive rates. If your service wasn't great, I mean, if you don't have great service, you probably don't have a job. And so taking good service and making it exceptional, and you do that with your people, having the right team of people, having the right leadership, just the entire culture as a whole. We care. We care about our clients. We care about our employees. We care about our communities, and we invest in those heavily. Bell has a pay it forward program. They give $1,000 to each of their full-time employees, and they allow us to give that to the cause of our choice every single year.
No kidding.
It's pretty incredible.
Wow.
Yeah.
Wow, that's cool. So what are some of the causes that you hear people giving to? I'm really curious about that.
Oh,
Threw you a curveball there, didn't I?
Yes, but I mean, people that have medical issues and maybe can't cover their costs.
Oh, yeah.
I had a friend who was diagnosed with MS and was a part of a team that relayed all the way across the United States. She ran 180 miles in a week. So that was
Wow.
what I participated in last year.
Very cool.
This year for our customer appreciation, we're having, what is the organization?
Wayside Waifs.
Thank you. Wayside Waifs.
Awesome.
So
we bring
donate
dogs to
them.
work all the time.
Yeah.
Did I have Maggie here when you guys
You
were
did.
here?
We met Maggie.
She didn't come today. So,
Oh,
but
too
yeah,
bad.
we love dogs around here at Real Media. So,
Well, you can come to our customer appreciation event and adopt one if you like.
okay, I'll do that. I wanted to ask you guys a little bit about the economy. It's a weird place that we're in, especially since COVID. How do you guys stay on top of that? That seems like a daily changing thing that you have to stay on top of.
Yeah. Staying on top of the market, it's, good luck,
Yeah.
And I don't think anybody is completely on top, because about the time you think you have it figured out, it changes on you. Locally here, I feel like inventory is kind of building. Things are staying on the market a little bit longer, so it's kind of stagnant, which is good if you're a buyer. It's not quite as competitive. For a hot minute there, people were getting offers in 7-10 offers, and it was just really competitive, and people were getting frustrated because they put in 4 offers in 5 weeks and not winning the offers, and that just gets frustrating. So I think that's kind of alleviating a little bit, and it's becoming still a seller's market, but it's becoming more of a buyer's market, which is kind of getting back into the right teeter-totters.
One of the questions I always had thinking about this is that I was mentioning my son just purchased a house, but so people would have to offer, to try to win, they would offer higher number and higher number. What if it doesn't appraise?
Well,
that seems like a big worry.
It is a worry, and in those situations, that's often addressed in that offer, in the contract. The buyer may say, if the property doesn't appraise, we agree to bring the difference of up to X amount of dollars. That was very common for quite some time. I don't see that as much now, and I haven't had appraisal issues lately. So, they happen.
Because the market's, the values of
Values
houses
have continued to go up. Yeah.
Isn't that crazy? If you could have looked back, I think about this, look back like 5 years ago and you knew what was going to happen, you just go out and buy everything you could buy.
Maybe. There are those thoughts.
Yeah.
Well, the best time to buy was 10 years ago, and I think that's been true throughout time.
Yeah.
Fair.
Yeah. Yeah. So the economy, do you see that? Do you still see the mortgage business growing, and people are going to still have to buy houses? But I notice a lot of 30-year-olds and younger, they're living in apartments now and having to save for a long time before they can actually buy a house. What do you think about that?
Well, the myth of having to save is an interesting one, because in reality, the minimum down payment to buy is only 3%. So
Well, that seems different than it's ever been, right?
it's been that way for a while.
Has it?
I think that, just educating people is really key, because there's a lot of information on the internet, and some of it's true and some of it isn't.
Yeah.
And certainly having a greater down payment is of value. But when you look at property values and how much they're increasing over the last year to 2 years, maybe you've saved twice as or 3 times as much as you had a year ago. But if the value has gone up, it doesn't actually save you. It doesn't save you in your payment, because now you're paying more for the house. So, I always try and educate people on that and remind them that real estate is about the buy. So if you would have bought a year ago, you would have that equity now that you don't. So saving is important, but you don't have to have as much as you used to.
Yeah. Do you think the values of homes will still continue to increase?
I do.
Yeah, for sure. There's ebbs and flows, but I think in general, kind of like the stock market, is always going like this. There might be a dip, but I don't think real estate has ever been a bad investment.
Yeah.
Well, we're in the Midwest. It's not like we're on the coast,
Yeah.
Where you see the extreme highs and lows.
Yeah.
Kansas City is a hot market. People want to move here. It's one of the top real estate markets in the country right now, believe it or not. So Never thought
Really?
I'd see the day.
Wow.
Yeah.
I didn't know that.
Thanks to all those great sports teams we have out there, I guess.
You got Pat living over not too far
Right.
from us. Yeah. So let's talk a little bit about your personal backgrounds. Jarod, tell me a little bit about your background. Like, where'd you go to school? How'd you get into the mortgage business?
Okay. Well, I'm from Iowa originally, and went to Iowa State University. Go Cyclones.
All right.
And I got into the business in 2003-ish as an originator, and I originated for just about 7 years, and then got into mortgage insurance and sold mortgage insurance to banks and credit unions for almost 13 years before getting back into the production side, and went to a local credit union and was a manager of their retail team, and then about 7 months ago came here. Just found my dream job.
Yeah.
Yeah.
Yeah. Awesome. Danielle, what about you?
I'm a lifer. I started in mortgage sort of on accident in 2002. I was going through one of those what do I want to do with my life phases, working at Starbucks.
I'm still in
and-
one of those, by the way.
Aren't we all? Got a job working for someone in the business in Lawrence, which is where I'm from, and never really left the business. Kind of tried to, but we were handwriting applications and didn't have to have licenses then, so I'm not going anywhere now.
Yeah. Well,
But
lots changed then, huh?
A lot, yeah, a lot has changed. I worked for People's Bank, a really small family-owned bank.
Yeah.
And then as they were acquired for 17 years in total, and left a couple of years ago to come here at Bell. Really missed that family atmosphere, and that's really what I was looking for. So
And
I've
you
been in
found
the
it.
business a long time, just not at very many places.
Yeah. Jarod, why Bell Bank?
Well, it's kind of interesting. A lot of it's because of Danielle. There's another producing area manager in Florida that's a good friend of mine, and I've known him for a long time, and he's always had good things to say about Bell. And
Culture.
yeah, it's about the culture. It's one of those things that's hard to explain. You got to feel it, and I just have never felt it the way I felt it here. So
That family kind of permeates.
Yeah.
Huh?
yeah,
And funny story, which we will talk about on our first podcast.
Yeah.
But technically, I
Be
work
watching
here.
out for that, people, by the way, right?
Yes.
It's coming.
I work at Bell because of Jarod, and Jarod works at Bell because of me. So
Wait, I'm confused.
I know. We just all we ended up at the same place.
Yeah. Yeah, that's awesome. All right, so let's switch gears a little bit. Let's talk a little bit about some of the products. Like, what are some of the things that you would offer? Especially, I'm interested in first-time buyers. I think that's probably, and you guys can expand on that if you want. But what are some of the things you can do to help a first-time buyer?
Yeah, sure. I mean, affordability, as we know, is difficult, and first-time buyers still want to buy. So we do have some great down payment assistance and grant programs that will assist. Depends on the state, depends on, a myriad of things. When the stars align, like it has recently, I was able to get a first-time buyer $17,500 in grant funds, which was incredible. Allowed them to...
That's huge.
Yeah, it really was. So those were government grant funds. We also have programs in-house that help and assist our clients with as little as 1% down. So
Really?
we assist in any way that we can. Every resource that we have, we always look at that with our clients and try and make owning a home more affordable.
Yeah. Grants, I've never even heard of a government grant for buying a house. I guess maybe I'm too old, but that's crazy.
They've been around. I mean, Missouri has their own, Kansas has their own. The Federal Home Loan Bank has one that's, we partner with them. So they don't always apply to everyone. But
What does that process look like? I mean, can that happen pretty fast? Is it? I feel like a grant. Anytime you say grant, like I've worked with a lot of people. Okay, this is a 6-month project.
No.
How does that work?
30 days. When they apply with us, we look at their application and do they meet the qualifying factors for what is, required for a grant. And then we present those to them when they are under contract on a house. It's the normal process. We do almost all of the work for them, and it's really easy.
it's pretty seamless for the borrower, which
Very.
is what's really important. We kind of see what they qualify for on the back end, and then we present it to them. and then they're pleasantly surprised. So like, oh, you don't need $10,000, you need $3,000 because we're able to pair this grant or with
And you
another
guys are
grant.
helping them find those grants?
Sure, yeah.
Yes. Yes.
That's got to be unique. I can't believe other companies are doing that.
I think they are. I just think some people are a lot more passionate about it than others. And, personally, that's a big passion of mine. It always has been. So we're always looking for new grants, new ways to, bring money to buyers and help them get into homes.
What are some of the things that you do to help determine the best loan option for your customers? I mean, how would you figure that out, I guess?
Yeah, I mean, obviously we get an application and, verify income and those types of things. And then we can kind of structure what their plans are and what their goals are. There's a couple different options for most people. So it's, I think we take an educational approach and say, hey, here's your options and which one aligns closest with what you're trying to accomplish. And I think I'm a big fan of presenting it to the borrowers and letting them make the decision. And then, they may try to explain what their situation is, but something might resonate with them differently. So I just like to have the options presented to them so they can make an educated decision.
Yeah. What are some of the options that somebody might consider?
Yeah, people definitely want to be educated and they definitely want to feel like they have a choice. I personally like to look at something bigger than just the house, right? So can you afford this house? Yes, but how much money do you have for your down payment? And maybe we need to look at paying off other debt and putting less down. Like my goal is to help bring financial freedom to your life, not only just a home that you love, right?
Yeah.
So it's important that we talk about your 1-year goal, your 5-year goals. Is this your forever home? Is it a temporary house for you? Is it going to be a rental? Based on those things, I think that really helps us curate the right strategy for someone together. It's a conversation. It's not just, here's the box, you check this off and we're good here, right?
Do you think most people are prepared for those conversations? Have they thought? The only reason I ask this is because in business, when I start talking about strategy, a lot of businesses haven't thought about it. They're just in business, they're doing their thing, they haven't thought about the strategy.
Right.
You're talking about strategy.
Right.
I think most couples, especially younger couples, I just want to get a house. I don't know. Is forever? Is it 5-year?
They don't always know the answers to those questions, but I think they appreciate being asked.
Yeah.
Because they feel as if we are really investing in the future of their success. I had someone to me say the other day, I feel like you care about this as much as we do, and that's a really good feeling. And it's true. It's genuine. We do. So they may not come into it thinking that it's a strategy, but I think that's part of our job is to just bring something more to them.
It's definitely important for them to start thinking that way.
Yeah.
Yeah. We should all think that way, right? Even in business, I think the strategy side of it is not really paid attention to very often. It doesn't feel like, especially in smaller businesses.
Yeah.
It feels like that. So tell me about the process. What does the process look? Can you talk me through all right, I want to get a mortgage. What are the steps that it takes to get that over the finish line?
This is not a really exciting topic right now.
Oh, really?
See how quickly I can
Should we edit
abbreviate
this
this.
out?
I mean,
Sorry, I didn't mean to ask that question, guys.
No, I mean it's a good question, but it is probably the least exciting part about
It
buying
is not
a house.
sexy.
You just fill an application out. Do you want to do it with me or do you want to do it online? Whatever works for you guys. Like I want to make it easy for the client. We ask questions about income, assets, we pull credit, and then we look at all of those things together and we can make the determination of what they qualify for. Now, that may not be what they want to spend in this day and age either. So I generally say, do you have a budget? How much do you want your monthly payment to be allotted for housing? I told someone the other day they qualified for $650,000 and they were first-time home buyers and about fell off their chair. So
Yeah, first-time home buyer.
just because you can doesn't mean you need to.
Or should.
Yeah.
Or should, yeah.
Yeah. So that's how we qualify them. And then they get a pre-approval and they get to find a house. And we really make the process as easy as possible.
Is the pre-approval process the way most people are buying right now? It's like I need to know what I can spend,
Yes.
and then I go try to find that and make an offer.
Yes.
Yeah, you need it to make an offer. Most real estate agents are going to require, I think all real estate agents require
is that
They will
right?
require it.
Yeah.
Yes.
Yeah. So yeah, you're not going to be able to make. Used to be you'd make an offer and then you'd go to the
Then
bank
you
and get your
go.
loan.
Yep. Things are different.
Old school.
Then you withdraw
Yeah.
the offer, possibly.
Yeah.
Just kidding.
Yeah. Yeah.
Yeah.
So that process is credit score key, or is that not as important?
It's definitely.
It's key.
Yeah. Yeah, it's just like anything else. The better the credit, the less risk, and
Better the terms.
the better the terms.
You're going to get better interest rates and
You
all
are.
that stuff.
You get better insurance. You get better.
Oh yeah.
Yeah.
All the things, add into the affordability.
I remember when we bought our house that had the mortgage insurance, and I finally paid it down enough to where I didn't have to have the mortgage insurance. That was like a celebration day for us.
See, and this is why people think they need to save 20% to put down because they don't want this pesky mortgage insurance. But if
I
you
used
have
to
good
sell
credit,
it.
yeah, this guy used to sell it.
13 years.
Yeah, I
I
know. It's like,
But I mean,
you're going to throw water at me or something.
it's not expensive. It's not, hundreds and hundreds of dollars. It's sometimes $20 a month. It's sometimes $40 a month.
It's gotten really affordable, and it's less than the cost of waiting.
It is.
So
Well,
So
I know it's a necessary evil. I know.
this is why
I'll
we have
admit
to
that.
educate, though.
yeah. Well, that's good.
Yeah.
That'll be a podcast.
There you go.
Right?
Yeah.
Common challenges buyers are facing. What are the common challenges?
I would say affordability right now. Insurance.
Got to be number one, right?
Yeah, I mean, insurance has gotten expensive, taxes have gotten expensive, and just the cost of homes have gotten expensive, and that's just a product of the demand we've seen. It's gotten expensive quick. So I think that that's probably the biggest challenge.
Yeah.
I mean, do you see the market still growing though, right?
Yeah.
People still buy, they still sell. Houses, families change, people get relocated. There are reasons. The interesting thing is that the high end, in my opinion, the high end part of the portion of the market is busier than it normally would be in something like this. And I think that
I wonder
is
why that is.
indicative of the fact that, a buyer with more money may or may not, just the dollar amount monthly, they may be paying cash. It may not matter as much. Which is not something that I've seen quite as prevalent as I do right now. But it's still busy.
Yeah.
Do people still use cash?
They do. We don't actually let them bring real cash, but yes.
Yeah, I know, like a real $100 bill.
No.
This shoot that we're doing, I was telling you guys about, we had to get some fake money.
Yeah.
So there's a company in LA that prints money that looks like real money, but it's like, we're all looking at it, it's like, man, I haven't seen a dollar bill for a while. You forgot what they look like.
I know.
It's pretty funny. So interest rates, I'm really interested to see what you guys think about interest rates. And I feel like they're going to start coming down. What do you guys think about that? Maybe I'm completely wrong on that. Does it matter?
I think you're right. It's definitely been a long time coming. I think most industry professionals have said it was going to come down 2 years ago.
Yeah,
and
right.
it hasn't. It's been persistent. We have inflation and some other things within the market, but at some point, something's got to give. And I think most of the people smarter than me probably think we're going to be trending down.
Yeah.
So,
I mean, it's improved, at their highs. They were in the upper sevens. We're staying pretty steady in the 6.75-ish range for a 30-year right now. And, the whiplash of the jumping back to the sevens and then back down isn't quite as frequent as it was. So to me, that's a good sign. I personally think rates need to come down slowly and gradually.
You guys will be overwhelmed if they drop fast.
It's just not it just won't be good for anybody.
Yeah.
So
the
slow,
industry can't handle it.
gradual, and just steady. So I think we're seeing some of that to some extent, but there's still a lot of uncertainty.
Yeah. Man, think of the people that will sell their houses. Like if the interest rates come down, that'll just throw the whole market into a flux probably, right?
I think that's a possibility for sure.
Yeah. Yeah. Slow is better.
Yeah.
Yeah. So we talked about the Kansas City housing market a little bit. Are there particular neighborhoods or types of properties that are really, really popular right now that you guys are seeing? Like maybe it's a price range, maybe it's a lot of people in Kansas City will see this podcast. Is there an area that's really hot?
Johnson County is always hot. I mean,
Yeah.
we're on 180 something when you go all the way south now for new construction.
Yeah, that's crazy.
It used to stop. Well, I'm dating
150th,
my
160th.
Well, I live at 159th.
135th was used to be
Yeah.
cornfields and cow pastures.
Yeah.
Just 3 blocks off of that.
Yeah.
And that's that I can remember. So it's continuing to expand. Northland is growing quick.
Yeah.
The company I was mentioning to you, they just got approved to build a whole community in Gardner.
Yeah.
But it's on the west side of Gardner.
Mm-hmm.
You know, and that's exactly what you're talking about. There's
Yeah.
nothing there right now, and it's going to be a whole new community.
Well, and I mean, not knowing what price point, I'm guessing they're gearing towards the lower, more affordable price point.
I think it's 400 to 600.
Okay. So 4 is on the low for new construction, but the land price is cheaper there too.
Yeah,
So,
right.
I mean, that's why. I
Yeah.
mean, Kansas City's grown a lot. I mean, there's not an area that people don't want to live in, really. I think Overland Park is always popular. Brookside is always popular,
Yeah.
but it's not
Do
isolated.
you talk to a lot of people that are kind of moving into Kansas City and don't realize how great of a city this is?
It goes in waves, but yes.
Yeah.
Yeah.
Yeah. I mean, it really is. We have a lot of, my dad was the director of HR at Marion Laboratories. I don't know if
Okay.
you remember that back in the
Yeah.
day.
Yeah.
But he always used to tell me how executives would move here and they loved it. And, like they'd move from the West Coast and East Coast, maybe Chicago, and they loved the size of house they could get here and the,
Yeah.
standard of living and all that stuff. I still think that's probably the case a
Yeah.
little bit. Kansas City's a really great market.
Yeah.
Yeah.
It's not as less expensive as it used to
Yeah.
be, and our taxes are certainly more expensive than they used to be, and more expensive than some other neighboring states. And so, while that's something that I think people don't always consider or think about too.
Yeah.
It is a part of your payment. It is part of your expenses.
Yeah. You don't think about that when you're getting a mortgage, probably, do you?
Well, you don't unless you have a great loan officer that educates you on those things.
Yeah.
Do you know anybody we could send them to?
Just a few.
Well, I want to wrap up here pretty quickly, but what advice do you have for new home buyers? I mean, and I'm really curious to know, it's like, okay, like my middle son, I'll just give you as an example. He works at Fidelity now. He's building his career. He's renting, trying to save money. What can he do to get prepared to make that first step of owning his own home?
You want to answer?
Go ahead.
He's probably more
You're on a roll.
prepared than he thinks.
Yeah.
Generally the clients that come in and they're new, but they have great jobs, they're saving, they're probably ready. They may not actually be ready to do it themselves.
Yeah.
I think a lot of people in that period, they're working, they're younger in their careers, and they don't really want the responsibility quite yet of committing to a house, is more what I see.
Yeah.
But you don't have to have 20% down. Credit, maybe if you're just coming out of school, having a credit
that's a
score
problem.
is
Yeah.
important. Sometimes if you've never had credit or any type of credit, you don't even have a credit score. So having credit, having a good credit score, and really just from a budget perspective, I think knowing kind of what you're comfortable with and being prepared for that piece.
How do you build credit at that age?
Yeah, you have to use it.
Mom and dad.
Yeah.
Yeah.
Oh, yeah.
I mean,
There
there's
are
a-
ways.
Yeah,
Yeah.
there's a lot of ways. You can be an authorized user on some accounts.
So mom and dad can help with that?
Yeah.
Yeah. When my kids turned 16, I added them as a secondary user on a couple of my credit cards, and they have had
No
credit
kidding.
scores since then. So it's kind of a little trick.
I wouldn't hand my card
Had
out
no
to
idea.
them.
No,
but-
you don't give your card to the 16-year-old.
Yeah.
Can I get on your
On mine?
Yeah. I didn't even know that.
Yeah.
Yeah.
Wow. And anybody can do that.
Anybody can do it. And yet, to your point, you don't have to give them access to your account, but it does allow that secondary user to take advantage of your credit history. If you've had a card for 10 years, your 16-year-old, even though they were only 6, has therefore had a credit card on their
Amazing.
credit for that long. So
I think you should do a podcast on that. That is a big deal.
Can talk about credit.
Yeah.
Yeah, there are lots of
I had
tricks.
no idea you could do that.
Yeah.
Wow. And they get the benefit of, the hard work of building a credit score. I know how
Yes.
hard that is.
It gets you kind of over that hump, and then of course it's easier to apply for your own credit card and get good terms, and then start using it.
How long would that have to be established before it's legit to a credit company?
I mean,
Is it immediate?
yeah.
It can be 30 days.
Yeah.
Really?
Yeah.
Wow. Okay. All right.
It's a trick. It's a little trick.
Yeah, that's awesome. I had no idea. Anything else they should do? I mean, obviously saving money is I mean, with the grants and some of the things
Yeah.
you guys are talking about, that's not as big a deal as I thought it was.
Right.
I would say probably the first thing is just talk to somebody, get your credit ran, see where you're at.
Yeah.
Kind of get your finger on the pulse. And if you're not ready, if you talk to somebody, they can tell you what you need to do to get ready. If you are ready, great, we'll give you a pre-approval. You can start looking tomorrow.
Also know your community. Where do
Yeah.
you want to live? And think about the next 3 to 5 years, because first house is exciting.
Yeah.
And if 2 years from now it's suddenly too small for you, or maybe you don't like the neighborhood because you weren't thinking about that, selling costs money too. So, you know, I think those are other things that first time buyers should be thinking through.
Yeah.
Yeah. Yeah, that's great. Maybe you guys should think about doing like an online class or something. Get
We do
prepped.
classes.
Well, I really appreciate you guys coming on. It's really great. If somebody wanted to reach out, how would you recommend they do that?
To either of us,
Just give me your email.
Your cell phone number?
No, truly.
We can put it in the notes if you want to, or would they just go to the website?
The website, I mean, you can go to the Bell Bank Mortgage website. My direct website is DanielleMortgageTeam.com. Cell phones, emails, but yeah, we can add it.
And just reach out, and you guys will help them assess where they are and
Yes.
Absolutely.
go from there. Last thing, so you guys are excited about the podcast. Can you give us just a little bit of some of the things you're going to talk about?
Sure.
Yeah. Go ahead.
This is the master of all things podcast over here.
All right.
I don't know about that.
Setting the bar high.
I'm trying. I think our first 2 episodes, the first one is going to talk a little bit about our story and a little bit about what we touched on today.
Yeah.
The second one, we have a guest coming on, Steve Richmond, who's kind of a world-renowned speaker and
From Kansas City?
He is actually out of North Carolina.
Oh, okay.
I worked with him back in my mortgage insurance days, and
Okay.
he does a phenomenal job. And we're going to talk about AI and how it kind of correlates with things going on in the mortgage business, and just about change in AI and how it's changing, and how our position as loan officers changing. So should be really good. I'm excited to get things kicked off and going.
We will have talks about grants. We may have some clients that want to get on and talk about their experience and how, obtaining those grants has allowed them to purchase a house. I mean, there are so many stories that deserve to be told.
Yeah, I love it. I love it. The grant thing's new to me. I'm like, my mind's kind of spinning on that a little bit right now. It's like I had no idea. But you guys could actually, if somebody would just come in and take the first step, you could help them assess if that's even a possibility.
Yes.
I mean, what do you have to lose?
Yeah.
If
People
it's
are
something you want to
afraid.
do.
People are afraid of being told no, and that's why we want to make it approachable and seem comfortable and easy, and just overall advocate for what's best for them. Sometimes that's honestly sending them somewhere else. Like, we want to be honest, and we want to find what's best for everyone. So
yeah, and I would say
not
that
scary.
I don't think no is really in our vocabulary. It's more of a
Right.
not now or not yet, and it's okay to coach them up and say, hey, this is what we need to do to get you to a spot where you can buy a house.
Yeah.
And
Well, that's awesome. All right. So the last thing that I always have everybody do, if you've watched any of our podcasts, is you have to do the movie voice.
okay,
Right? So what do you think, Danielle?
I don't know.
So you want me to show you how to do it?
Yeah,
So
let's do it.
You got to get really close to the mic. You just have to say, "In a world with real media."
Just
can do
like that.
Yeah, just like that.
You
gonna
go next.
all right, you ready?
Yeah.
In a world with real media.
Oh boy, this could be interesting.
In a world with real media.
Edit that out.
That was good.
It's awesome. All right. Well, thank you guys for being on. This is really awesome. I learned something today.
Good.
That's really amazing. So I'm excited for your podcast, and I think it's going to be really great. Hey, if you are interested in learning more, you'll have to check out the podcast. We'll share it on our website and stuff so people can see where to go. But share this content. like it, comment, send it out to people. We want to get all this out. And we thank you for watching the podcast, and we will see you on the next episode. Thanks.
This has been In a World with Real Media. Thanks for joining us, and be sure to subscribe on iTunes and follow Real Media on Facebook, Instagram, and LinkedIn so you never miss an episode.